Right, let's talk about the market. I actually promised that you guys that I'll be talking about why I think that the market might actually have a few headwinds coming. Okay, which means that the market most likely is going to be coming up with some obstacles along the way. Okay, first of all, let's get back to before I think about 2022, the early 2022, before the Fed started raising rates. Okay, if something that we have to learn from back then is that we do not fight the Feds. Okay, and when you fight the Feds, you basically lose a lot of money. So chances are, if you invested in 2022 and you invested heavily in 2022, chances are you probably lost a lot of money in the stocks market. Okay, and the reason why you actually lost a lot of money in the stocks market is because you were fighting the Feds. You were investing when the Feds were dumping. The Feds was cleaning out their balance sheet. They are trying to bring up the interest rate. They are trying to bring inflation down. Okay, so clearly during that period of time, unless if you are investing into oil company, you're investing into energy company, other than that, you're basically gonna get destroyed in the market. Okay, so now we are trying to get back into the current cycle. It's true that the Feds currently do not exactly have to pause, or they don't exactly have to lower the rates. Okay, and I'll tell you why. Right now we have multiple data set, including your employment data, your jobless claims and things like that. All of them are actually supporting the fact that the Feds don't have to actually U-turn. The Feds don't have to pivot at all. Okay, if the pivot does not actually come, there is a possibility that the Feds actually might just continue on with this 5% interest rates throughout. Okay, and I'll explain it to you is in simpler words. Okay, so for example, right now we're at about like 4.3% interest rates, and the economy is doing pretty good. Okay, even Jerome Powell came out to say, jobs came out, we have higher employment, higher than ever, jobless is lower than ever. Overall, if you look at the economy, other than the huge inflation bubble that we have on the side, we just push it to the side, everything else looks pretty good. Okay, so even if you actually were to bring it up by another 0.25%, or even bring it up 0.5%, okay, bring it all the way to about 4.7% interest rate, chances are the economy is not going to suddenly go down all the way. Okay, so the question actually comes is, do the Feds actually need to pivot? Because right now, the current situation is that the Feds don't exactly need to pivot. There's no actual reason for the Feds to pivot. The economy is doing pretty well. There's no recession that is dooming to come as of right now. And if all this actually goes as planned for this one whole year as it is, and nothing actually changes, what reason does the Feds have to actually bring down interest rates? So this is kind of like the opposite play of a hard landing. You're talking about a completely perfect landing to the point where the Fed is gonna drop perfectly on the floor, and that they're not gonna make any dent of a noise. Okay, they're just gonna drop like this. And when they actually do such a landing, okay, it means that inflation would slowly subside. Inflation will eventually have this so-called a disinflationary process, where we actually start to see, instead of an increase of 0.8% month over month, things like that, we are starting to see like 0.2% month over month, 0.1% month over month, 0.2% month over month, things like that, and then we start to see the whole entire inflation just dwindle downwards. And then when we see inflation kind of just go downwards a little bit, maybe reaches about like 2.5%, okay, by 2024, for example. By next year, we actually see inflation go down to like 2.5, 2.6%. When that actually happened, it means that the Feds effectively have already gotten a soft landing, okay? They have achieved what they wanted, which is bringing inflation down towards the 2% mark. Okay, which they are pretty close, if according to this scenario, they actually reached there. Now, what's the reason for them to actually cut down on interest rate? There's no reason for them to do so, because they can just keep interest rate at 5% from there on out. Because if they were to keep inflation there, or if they were to keep interest rate at 5%, for example, 5% or 5.2%, 5.3%, whatnot, they can leave it there. And if the economy is still continuing to do very, very well, they can just pause rate as it is. And if they are going to just do that as it is, that means that their balance sheet is going to be pretty sized up. And when sized down, sorry. That means that their balance sheet will be sized down to a point where they don't have to actively, invest into the open market. They can just invest into interest rates on its own. They can just invest into bonds. They can invest into treasuries and things like that. And there's no reason for them to get into the open market. And what actually happens for us is that for people who are actually actively in the stocks market as it is, you're probably not going to see a huge increase in your stocks market anymore, because everything else, your market liquidity is just completely drained out. The Feds control trillions of dollars with a T, trillions of dollars. Okay, and with them saying that, we're not going to be putting up our money into the open markets, we're going to be putting it into bonds and treasuries. I can assure you, when that actually happened, the open market is going to get destroyed. Okay, which means that the Feds don't have to pivot. And that's kind of worrying for me. At the moment, I'm kind of looking at it and I'm thinking, if that were to be the case, then we are most likely going to see horrible things happen. Okay, but on the flip side, for example, for people who actually hope that the Fed actually pivots, it means that we are actually hoping for a recession to happen. Because right now, without a recession at the moment, we cannot really see the Fed pivot. Without a huge thing happening, if we do not have a labor market destruction, we do not have a demand destruction, we do not have a outright war, and let's be honest, the whole Russia-Ukraine situation did not even move the Fed at that much of a needle. Okay, you're going to need a lot of macroeconomic crisis happening at the same time for the Fed to be like, okay, you know what, we have to pivot now, we have to lower our interest rates down to 2%. Or down to 0% or whatever it is, which means that we need to see an insane recession to actually see the Fed pivot. If this recession do not come, effectively we are just basically saying that, we are going to accept the Federal Reserve keeping interest rates at 5%. Effectively, that's going to be the case. Okay, I know that this is a huge turn from my own expectation, 2 months ago, 3 months ago. But something kind of just clicked in me, and I was kind of worried about it. Of course, I'm not saying as if I'm just shorting the entire market right now. I'm not completely out of the market at all. I am still in the market at the moment. I'm just kind of really reading into the market to really understand if my thesis is correct. So chances are I might be late about it. I do not know, but let's be honest. I'm recording this on a Friday. Okay, so chances are you're going to be watching this on a Saturday, and yesterday the market was already pretty trash. Okay, the SPY, the SPY didn't actually drop that much. The SPY dropped by a little bit under 1%, but a lot of my holdings actually dropped down pretty badly. Okay, so I don't know. I'm thinking that there might be a liquidity issue somewhere. Okay, I'm not sure if this is going to be a Fed's pivoting situation. I really hope it isn't, because if it is, it means that all of us can only hope for a recession. And hoping for a recession is never good. Okay, that's going to be affecting everyone. But anyway, that's kind of my take on this whole entire thing. I hope you guys enjoyed this video. But anyway, I'll get back to you guys on the next video. Thank you so much for watching. I'll see you guys in the next one. Bye.